Okay, thanks very much, ULI. As was introduced, Susheela Rivers, I manage the Hong Kong office of DLA Piper. From a practitioner's perspective, I work within the Asia Pacific region, and so I can give you some insights as I see it. I also run the global sector for real estate, i.e., looking at clients and how they use their capital. So in relation to today's title, the latest capital flows and trends in Asia. For the purpose of Asia, actually Asia will cover North Asia, of course China, Japan, Korea, Southeast Asia, also really Australia and India, although my focus is really not Australia and India today, but I'll just mention some trends there. So my first slide is about what are the drivers for trends. So I'm going to give you a quick overview. I'm going to read off the slide. You know, it's never been like this before where there's this sure weight of capital. The reason for that is there's been robust economic growth, for crisis, and there's a sort of influx of capital. Okay, there is a pinging sound. Can people hear that? Okay, good, it stopped. So, quick question for everybody is, where is the cycle? Everybody asks this, is this the start of the cycle, the end of the cycle? How long is the cycle? I think we are experiencing a long bull cycle. Question is whether we're coming to the end. There are some people who say it's a very long beginning. My response to that is we are within the cycle, and it's not always the case that the cycle has to have an end. So maybe we are in a cycle, and because of various measures, the cycle continues. We're obviously in a period of political and economic uncertainty. We've got the U.S.-China trade conflict, but ultimately in Asia, the fundamentals are still robust. We've got a situation certainly in a few countries where the cost of borrowing is still very low. Question whether it is on the upward trend. So we'll have to wait and see. But often the low cost of borrowing is used as a measure to deal with other economic issues. So I like the saying, cash is cheap because of the low cost of borrowing. But for a lot of investments, cash flow is expensive. So that's why investments are expensive because people are searching for the higher return. The follow-on question is, in the search for the higher return, what is one's appetite for risk? Obviously, people love high return, low risk, but that is quite hard to find in Asia. And sometimes you have to go into a different strategy, like a build to core and an opportunistic value add strategy for that higher return. In Asia, also, there's often a lot of competition because the supply is low. Another thing to think about, which is driving trends, is the impact that technology has in relation to real estate, whether it is for logistics and technology or retail, and certainly with the way we work. In Asia, I would say where capital is flowing, there's always a preference for transparent markets. Transparent markets are the ones often with the rule of law and good data. And so we see a lot of investments going into markets like Singapore and Japan, and of course Australia. I'm going to take you to the next slide. The next slide is which are the countries that are winning investments in Asia. I've kind of listed some of the countries that are favored. I would say Singapore is way up there. Tokyo, you've got the emerging countries of Vietnam and India. Australia, always a favorite. Korea, China, and I've put Greater Bay within that, and the reasons will be obvious. And of course, we can't have a session in Hong Kong without discussing Hong Kong. So let's look at the next slide, which is what are the sectors? What are the winning sectors and what are the trends within those sectors? So office is always a favorite. It's consistent demand for that. It's now also technology enabled with flexible space and co-working, and technology making that even more attractive. It's often tenant-led, what the tenant wants to do with the space. The one thing to bear in mind with office is more recently, the operating model is definitely being scrutinized to make sure it's profitable. I've put there build to core value add strategy being used to achieve the higher returns that I mentioned earlier. Logistics also all very, very popular in Asia, certainly both in emerging and established markets. They have overperformed generally. You've got technology improving supply chain and operational efficiency. Urban logistics, definitely a new area of interest, sort of bringing the logistics closer to the city. And for most of Asian cities considered to still have an undersupply, the big play with logistics is the infrastructure that goes with it. So some countries are better placed than others. Co-living, co-working, obvious appeal, certainly in Hong Kong and certain other high-cost residential environments. I like to mention retail because retail is a very interesting sector. Perhaps people stay away from retail, but clearly there is a still great demand for physical presence, and it is even more attractive. It's coupled with enhanced service offerings, and more latterly also putting sustainable features within that retail asset. So in relation to the countries I mentioned before, I'd like to talk about Singapore. So Singapore now has a top spot for investable or investment go-to. It was 21 in 2017. The glut that was there before has been absorbed, and now they're experiencing an all-time low vacancy rate. A lot of foreign capital going into Singapore. For sure, it has benefited from the situation in Hong Kong as the alternative to Hong Kong. So 62% surge in deals since the Hong Kong situation developed earlier in the year. The big one there is, for me, I'd like to mention the Allianz Gore acquisition of Doha Tower, showing foreign capital coming into the city for 1.6 billion. I mentioned Tokyo. Tokyo has been a favorite for a long time because of the low interest rate environment. It's got good returns, very easy to transact. It's got no controls over repatriation, very tax efficient. The issue with Tokyo and Japan is it's very hard to source. It's not always transparent from a cultural perspective, and very strong local competition that tends to trade between themselves. Some hidden opportunities in Tokyo because technology, and they're big on technology. It sort of it enables the e-commerce modernization. It's probably leading there. Similarly, with dealing with strategies for aging demographics. Next one, Vietnam. Oh, I didn't turn the slides on. I'm so sorry. So that's Singapore. You get the slides. You or I will send them to you. The next one is Vietnam. So Vietnam, often seen as an alternative to China, large population, showing GDP growth of 6.6 to 6.8%, so strong growth, very low unemployment, very young workforce, and there's demand across all asset classes, from residential to flexible workspace, because people sort of leap into that space, which is the trend, logistics and hotels. So it looks like it's hitting all the sectors. I'd like to mention Seoul because it's a very liquid city. The commercial property environment is robust. There are two types of capital coming out, and we deal with in Seoul. It's more conservative capital that prefers debt, and perhaps the pension funds that's prepared to go up the risk curve. Sydney, I got to mention Sydney. It's a long-time favorite. It always delivers. It's liquid. It's stable. It's a high return market. It's also got low vacancies, and of course the not very strong Aussie dollar adds to the appeal. Melbourne, all the same reasons, and to boot, it's cheaper than Sydney. Over the page, I like to talk about China. Shanghai and Beijing, always strong. They're big mega cities. You've now got domestic capital also staying within China and within China. I see Shanghai is very active, and I see Beijing as very stable and strong. Logistics, a winner, just the sheer volume of e-commerce and people. The trade war will impact, for sure. It will impact manufacturing and trade. As a result, office may soften a little bit, but retail is still a very strong consumer market. Greater Bay Area, Shenzhen. I'm just going to mention grade A offices in Shenzhen. Lots of activity. The space is meant to double in the next 5 years. I've given you some stats there. Very big on high-tech, advanced manufacturing, and fintech. A lot of the big tech companies are headquartered there. I just feel that Shenzhen is also quite poised to take whatever it can out of Hong Kong as well. So it's a mega city in the Greater Bay Area. So let's also have a chat about Hong Kong. So for Hong Kong, due to the protests that started earlier in the year, definitely I've seen commercial property deals fall. by as much as a third in a very short period. Sort of low deal volumes since 2017. But let's see. Obviously, retail, you read it on the papers, have suffered. Hotel occupancy also have suffered. In relation to deals, I've seen some co-living deals that's propping up the hotel sector a little bit. The people who are positive still about Hong Kong are obviously the family offices, developers, the high net worth, who are perhaps looking for the opportunities to catch good deals. Question about distress. I've seen some sales to get the cash out, not necessarily distress. I think owners still have holding power and they're not highly leveraged. Although obviously values have changed. An example would be, I suppose, Kimberley Hotel in TST in October. It sold for 28%, the below the asking price. That's a stat worth noting. So in conclusion, I don't want to go over. In conclusion, I would say Asia is a must for any investment strategy for the sake of diversity and growth. It's still a growth story, a strong growth story. The low interest rates, I question whether it will change, but it looks like it's set to remain quite low. There is still a search for value and return. I would say it's not the end of the cycle. It's in the middle of the cycle, and the cycle might not need to have an end. Trade war looks like it still lingers, and of course, with that lingering trade war issue, there will be uncertainty. A big statement, politics impact for sure, and we've seen that happen here. And the last point is the real estate industry will embrace technology disruptions and convert them into opportunities. So those are the trends I'm seeing. I hope that was useful for everyone. So on that note, I'm going to sign off and say thank you to ULI for hosting this today. And feel free to raise questions, and I'm sure my slides can be shared if you find that useful. Thank you very much, ULI.